Hello everyone, welcome to our Accounting 210. In this chapter, we will start talking about chapter 7, cost, volume, profit analysis. Um, so first, I want to say congratulations. You will say congratulations what, right? I want to say congratulations because from this chapter, I think we move more to the managerial accounting part instead of the cost accounting part, which means we kind of almost done with the cost allocation, manufacturing overhead, especially that part. I'm not sure you like it, yes or no, chapter 3, chapter 4. If you like it, that's perfect. If you do not like it, then at least you don't need to worry too much from this chapter on. We are closing that part, right? We don't worry too much about the manufacturing overhead allocation. From this chapter, to next other chapters, I think we will move more to the decision making or other part. And then for chapter 7, it talks about cost, volume, profit analysis. Personally speaking, it's one of my favorite chapters. Many reasons. First, I think the concept is more straightforward. Definitely, for me, it's easier to understand than the manufacturing overhead allocation. The reason is, honestly, if I cannot visualize a concept, then it will be hard for me to understand it. Manufacturing overhead allocation, I really cannot really say manufacturing overhead. Then I know how to do journal entry. I know how to do the predetermined rate. It still bothers me, especially when I started learning that concept. But chapter 7, CVP analysis, it's easy to get it, and then we can apply it to our daily life. So I think most of my students, they like this chapter. After watching this video, reading textbook, let me know your thoughts, and then you like it, yes or no. If you don't like it, that's fine. People have a different preference. But I just want to say, this chapter, there is just one hard part, honestly. I think the others are straightforward. So don't cry, right? Don't cry if you feel chapter 2, 3, 4, those are hard chapters. Don't give up. Hopefully you feel better after learning this chapter. Okay, now let's get started. We have 5 learning objectives, and they are all important. There is one part that is hard. I will pay special attention on that one. But others, as I say, you will have a lot of calculation in this chapter. You will have a lot of calculation, but concept is just there. Okay, learning objective 1, CVP analysis. So you will say, what's CVP? I thought we talk about cost, volume, profit analysis. So the initial is CVP, right? So when you want to show off in your friends, instead of in the whole world, you say, hey, CVP analysis, they will say, oh my goodness, you definitely have learned accounting 210. So CVP analysis is very useful for daily life. If you read the news, you kind of know this terminology. So what we are trying to do, hey, look at this name, CVP is from these 3 words, cost, volume, profit. So basically how our profit will change when the cost or volume changes. So that is why we call CVP analysis. Cost, volume, and profit. How will cost and volume affect your profit? That's very important because we are managers. We want to know, how will this change our profit? A textbook will give you an example. A sales price that minus your cost, that will give you gross margin. Oh, also maybe give you contribution margin. Sorry about that. Minus all the variable costs, give you contribution margin. Minus all the cost of goods sold, give you gross margin. But in this chapter, we talk about variable cost and the fixed cost. And then also your volume, those costs, then that will decide your profit. And remember in chapter 6, at the end of chapter 6, I said, if you had a hard time to understand the CVP, understand the variable costing method, don't worry too much because we will definitely go through that in detail in chapter 7. So that's the part of chapter 6 and chapter 7, they are kind of connected. CVP analysis, remember, is only for internal use, right? It's only for internal use. So when we do external, when we file with the SEC, we have to use absorption costing method, which is just the traditional method. for internal, when we can use this CVP analysis, which is also called variable costing method. It tells us the relation of the cost, volume, and profit, right? CVP. There are 4 assumptions. I'm not going to explain in detail. Read your textbook. So first thing is that the sales price we think remains constant. So no matter the demand is high or low, it doesn't really change for the range of volume. And then we can classify all the costs to either variable or fixed. I know you said, hey, chapter 6, we talk about mixed cost. But in this chapter, we just assume it's either variable or fixed. It cannot be both. And then inventory will not change. Our production will be the same as our sales. We don't worry about if it doesn't match. We don't worry about that now. Product mix will be constant. We talk about that later, product mix later. Okay, so before we go to the specific all the learning objective calculation, I want to first give you an example, and then you do this example first. You check your answer with me, and then I show you my work in the next video. So this video will be kind of short, give you the brief idea of chapter 7, and then we start bringing the concept of CVP. Let's look at this example. Assume your professor, Zhao Xiaosong, right, has to pay my fixed monthly student loan $600. So no matter I earn money or I don't earn money, government said, I don't care, every month you pay me $600 because that's your student loan. So now I teach accounting 210 and then I start earning money, right? That's teaching now. Every day I teach 1 class, then I will earn $40. See, very poor, right? Not a lot of money. And then, but every day I still need to spend $10 to eat, right? I earn $40. So that is kind of my revenue. But I need to spend $10. So it's kind of like my expense, right? So this is kind of like my variable expense, because if I more days, then I will eat more meals. 600, that is kind of like what? Kind of like my fixed cost, right? My fixed expense. This is kind of like my variable expense. So, I just use my personal example, but you can think about the idea and apply it to the business. So as you do this first by yourself, hey, you don't be lazy, right? I know you are all busy, but you are all very hard working. So I leave those 3 questions to you. Every day, what is my income after deducting the meals? This is straightforward, right? What is my income after deducting the meals? Second is, if I want to pay off the this should be $600. I'll change it now. So if I want to pay off my $600, Okay, so if I want to pay off my 600 fixed student loan, how many days I should work? Then the last question is, I'm not happy with just getting 0 left, right? I want to earn some money every month so that I can go shopping. I have other things to do, right? So if I want to earn $300 after paying my $600 of my student loan, then how many days I have to work? Okay, so you help your Professor Song, to figure out her situation, and then I check my answer with you in the next video. Thank you. I see you next time. Thank you.